Okay, good afternoon, traders. This is going to be the easy money review call. So basically, we're going to go over the easy money trades from this week, September 5th to September 8th, and how we could have made our mark on the week. Okay, let's get started. The first trade we're going to go over is Airbnb on Tuesday, September 5th. So um, after hours on Friday, I believe, Airbnb put out a report that they were set to join the S&P 500, or that news headline came out, and Airbnb shot up and gapped up almost from 134 to 141 Tuesday in the pre-market. And because we've seen how other stocks have reacted positively to S&P inclusions, I scored this catalyst an 8 out of 10, and just taking it at face value, it was bullish, and playing longs on Airbnb made sense to me off the open. So intraday going into Airbnb, the trade that was easiest here was the BTO, and basically Airbnb came down at the open. We saw a first move down on volume, and then Airbnb quickly traded back through the opening price over 141.15, and that could have been your entry. Just trailing prior 2-minute bar lows, you would have gotten stopped out here at 940 at 143. So that's a solid 3 risk to reward trade and a nice base hit. Okay, next trade we're going to go over is OSTK on Wednesday, September 6th. So let's go over there. Yeah, so in the pre-market, OSTK basically gave a Q3 performance update on Bed Bath & Beyond, and this company recently acquired Bed Bath & Beyond, I believe last month, and they put out a statement saying that Bed Bath & Beyond has experienced year-over-year growth since their business launch on August 1st, and how everything's going great. And even in a challenging macroeconomic environment, they've acquired new customers and they've turned the business around, yada yada yada. And I guess the investors of Overstock don't like that they've acquired Bed Bath and Beyond. So on this news, the stock gapped down 12% in the pre-market, and you could see that on this gap down, we're holding lower, right? So we've gapped down from 2750 down to 2450, almost 3 points, and we've had no real retracement yet, or we've had very shallow retracements. So when a stock is holding lower in the pre-market, that's indication to me that it's very strong selling pressure, and continuation to the downside is of higher probability or is more likely. So based on that price action, and the negative reaction to the catalyst, I didn't think it was that bad, but based on the negative reaction in the price action, I thought that this could set up a really nice intraday opportunity, and that's exactly what we got. Is on the open, we saw a first move down from 25 down to 23 in the first almost 10 minutes. And then after this strong opening drive, we start to consolidate very cleanly over this 2260 area, and we test it 1, 2, 3 times. And once we start to consolidate, unusually after an opening drive, and we're holding lower, right? Essentially, we're down from 27 to 2260, and we've had no real retracement. That just once again reaffirms how strong the selling pressure is, and that can add further conviction for this continuation trade. You take the break under 2260, stop at the entry bar high, and then once again trailing prior 2-minute bar highs, you would have got stopped out here at 1006, which was also, excuse me, we also got some capitulatory volume here at 904, which we saw um, did more volume than the opening print. So usually when we get this large inflow in volume, that could be another reason to sell into capitulation and not waiting for the turn or the break of the prior 2-minute bar high. So that was Overstock. Next trade we're going to go over is the same day on the 6th of September, Wednesday. We're going to go over AMC. So excuse me. So AMC in the pre-market came out with news that they were filing to sell $40 million worth of common stock, and I believe that this company's market cap is this company's float is 158 million. So 40 million divided by 158, about 25% of the company. I don't know too much about filings and dilutions, but just once again, taking this on face value, it seems like negative, very negative news, and the stock dropped from almost 1360 in the pre-market down to 1160. And once again, this is another common characteristic we're going to see in a weak stock is that AMC is not able to bounce. It's holding lower, it's holding lower. Every retracement is very shallow, and we start to hold lower cleanly over this 1160 level in the pre-market. And actually see it better on a 5-minute chart is that we put a very clean consolidation range here at 1160 with multiple tests. And if that support area is taken down to the downside, once again, it supports a very strong continuation move. And that's exactly what we got is at the open, we took out this 1160 level on volume, stop at the entry bar high and then trailing using the prior 2-minute bar high, you would have got stopped out somewhere here at $11. Yeah, the stock did go all the way down to $8, but you know, this was the easiest money that has a repeatable system that makes the most sense. And I think that's the most important part is that, you know, you don't have to catch the full move to make your mark on this trade. Yeah, it was nice. It moved from 1160 to 840, but even just catching 1160 to 11, is also a really nice repeatable trade. And yeah, this trend did lower for the rest of the day, so that was interesting. Okay, next trade is going to be on AI on the 8th of, the 7th of September, so Thursday. So AI was a day one earnings play. So AI gapped down in the pre-market um, after reporting earnings of an EPS of -9 cents versus -17 cents expected. So they beat on EPS. On revenue, they beat 72.4 million versus 71.5 million expected. And then they guided their Q2 revenue lower based on the expectation, and then they basically reaffirmed their full year 2024 guidance. So that stayed unchanged. So based on the top line and bottom line numbers, I gave that a 6 out of 10. I didn't think it was very, it didn't stand out. It was very much a mixed reaction, right? Where they beat on EPS, beat on revenue, and then just missed their Q2 or lowered their Q2 revenue and then kept their full year the same. So when we have mixed earnings and the stock is once again the sentiment of the stock is not reflecting those mixed earnings, right? We're gapping down. I think it's like 11%. This can create a really nice trading opportunity as investors might be positioned offsides. So in the pre-market, we put this really clean pattern together at 28.10, where price comes down, we test, and each time we're making lower highs into this 28.10. And I think when Lance talks about this, he talks about the bouncy ball pattern. To me, it's just consecutive lower highs into support. That just reaffirms that sellers are in control, and each subsequent bounce is getting weaker and weaker and weaker. And when that support breaks, it can create a really nice, once again, continuation trade to the downside. And it did happen in the pre-market. I didn't take that trade, but I did think that if we ended up getting a retest of this support area, support then turns into resistance because all of the all of the demand that was sitting here at 28.10 now has turned into supply. And on that retest trade, we could take a really nice scalp lower. And that's exactly what we got is during the midday, AI, kind of had a volatile open, came down, then held 22, or excuse me, 25.50, came back up, started to turn up, and then once we got that retest of that important resistance level, or support level, now resistance level, that I scored a 9 out of 10 on an intraday basis, we got a really nice stuff candle here, and I believe large offers were stacked on the tape. I'll have to go back and review that, but those two confluences gave me conviction to take this stuff trade off of resistance in a downtrending stock at a 9 out of 10 resistance level with stacked offers. And once again, this stuffed, and then you could have used the 2-minute bar high to just trail and gotten stopped out here at 22.50. So really another really nice base hit. Yeah, you didn't catch these moves, but once again, it's about executing your repeatable system, finding good stocks, marking good levels, and then trading off of those levels. And I think that AI provided a really nice retest opportunity when it came back to this 28.10 resistance level. So yeah, another straightforward trade there. Next trade we're going to talk about is DocuSign on Friday, September 8th. So this was another day one earnings play. DocuSign in the post market on Thursday reported EPS of 72 cents versus 65 cents expected, 9% beat, and then revenue of 687.7 million versus 677 million expected, 2% beat, so pretty much in line. And then they raised their guidance and then reaffirmed they added a $300 million stock buyback plan. And then they raised their full year guidance revenue from 2.7 billion expected, 2.73 billion expected. Um, and yeah, so it's a pretty decent catalyst. Pretty much a triple earnings beat on EPS, revenue, and guidance. So because of that, I scored the catalyst an 8 out of 10. And once again, right, when the stock sentiment doesn't support the ranking of the catalyst on the top and bottom line, this can once again create really, really nice trading opportunities. And I think we got a lot of that this week, where the first move up on open was strong, or not on open, after hours when it reported earnings. We came up to 55, and then once pre-market started, we were at the low end of the range, and this buying pressure had essentially been sold off, and the stock was holding lower. So we're down 3 points from the earnings reaction high, and that tells me that buyers are not really excited about this beat, right? Otherwise, a stock that would want to see continuation would, break 55 and then start to hold higher and consolidate at the highs, and then break that consolidation to the upside on meaningful volume, right? This does not look like a stock that wants to move higher. This looks like a stock that wants to move lower or not do anything or chop around. Very uncertain price action. So off the open, I was not really confident looking in long trades. And when we got that first move up on volume and we traded back to the opening price, I thought that was a really nice entry for a scalp play, as sellers were persistent. And once again, entering under the opening price at 52.18, risking the high at 52.85, and then using prior 2-minute bar high to trail, you would have got stopped out here at $50. That's another really nice base hit trade that we saw multiple times this week, and DocuSign had a really nice risk reward based on that. So yeah, so that was another nice trade. Next trade I want to talk about or the last trade I want to talk about is Kroger. So this was another day one earnings play. Kroger reported earnings on Friday of 96 cents versus 92 cents expected. On EPS, 33.9 billion versus 34.3 billion expected. They missed on revenues, and then they guided their full year to the low end and slightly negative in Q2. So another mixed earnings catalyst. I scored it a 5 out of 10. Beat on EPS, miss on revenue, and then a lowered guidance. I didn't think I didn't think it was anything spectacular. But based on the intraday price action, the stock had other plans, right? Off the open, we pretty much trade in a straight line from 44.40 to 48.20, and this is a huge, huge move in I believe 30 minutes, right? So the stock's ATR is 0.75, and we've pretty much traded 5 ATRs in 30 minutes right off the open on a mixed earnings catalyst. So my initial thought is, I want to start thinking about mean reversion. And right off the open, we get this clean trend, and you can kind of see that by this trend line I'm about to draw. And, once we hold this trend higher and we start to get extended from this trend on volume, and and we break that trend line, that was the signal for me for a mean reversion rubber band type trade where I believe we don't validate the prior 2-minute bar low for 30 minutes. And once that 2-minute bar low is taken out on the highest volume of the day, breaking the intraday trend, that to me was a signal of the turn. And you could have got short there at 47.75, risking about 50 cents, and targeting mean reversion back to the moving average at the middle of the Bollinger Band. And then once the backside was established, so then once we try and hold that 20-day and print the lower high here, we get another nice opportunity for a scalp trade on that lower high, and then we trade back into VWAP at 47, which is not on my chart. But I thought this was another easy money trade. You don't see this trade a lot, but I think that it's an important pattern to be aware of. Mixed earnings catalyst, stock trades 5 ATRs up from the open, pretty much in a straight line, not even invalidating the prior 2-minute bar low. We have a clean trend. We get acceleration from that trend line. Then we break the trend. We turn on the highest volume bar of the day, and that can trigger a mean reversion back to the moving average. So that I thought was another easy money trade and one to put in the review. So yeah, that's all I had for this week. If you had any easy money trades that I missed, please feel free to let me know. And if you have any comments, questions, concerns, feel free to reach out, and I'm all ears. All right, thank you.